actually understand buying or selling using the market structure. Remember, the market structure is a particular foundation of the SMC that must be well understood. Means that you must be able to identify if the market is going uptrend or the market is going downtrend. Let's take it gradually now. So when you're going uptrend, we're expecting a break to confirm that the trend is up. All right, it's as simple as that. This is the breakout structure. The breakout structure in an uptrend is a higher high. All right, so where the trend reverse from is a higher low. This is a higher low. All right, so higher high, higher low. You must be used to that by this point in time. So this is a higher low. All right, so this is a higher low. All right, so this is the higher high, and this is the higher high. All right, so you can as well call the swing point as well. Okay, you can call the swing point. So if a chart is very long and going from one swing to the other, going from this swing to this swing like that. So this is the highest point of reversal. I'm just doing a recap of the video I sent earlier. Highest point of reversal. This is the lowest point of reversal. You must be able to identify the highest point of reversal. You must be able to identify the lowest point of reversal. All right, that's the swing point. Okay, so that's about that. Let's go to the downtrend now, because I don't want to spend too much of time explaining the basics of the downtrend or the uptrend. All right, so I just want to go straight to the point so that I won't make this video to be very, very long. Okay, so the downtrend is when the chart is going downward and is having series of breaks. Okay, it can actually signify and tell that the chart is downtrending. Okay, the chart is downtrending. And remember that this part is is a lower low. Okay, this part is a lower low. Okay, and this part is a lower high, and this part is a lower high. Irrespective of how the chart looks like, provided it is uptrend or downtrend, it still means that the chart has swings. So for it to go from highest point of reversal to the lowest point of reversal, and it's still extending to the upside, it means it's a swing. All right, so as simple as that. If I want to buy from the uptrend currently, this is uptrend. Okay, sorry, I'm adjusting this a bit. So this is an uptrend. If I want to buy from the uptrend, I want to make sure that the candle, I want to make sure that the lower time frame does what? Breaks the most recent lower high. Okay, it must break the most recent lower high. All right, so if the chart doesn't break the most recent lower high from the demand zone, there is no way I am going to buy. All right, so from the supply zone, the chart must break the most recent higher low. All right, so the demand zone is where the price is very, very cheap. All right, so this is a sell candle now. This is a sell chart, or this is a sell trend, which is a downtrend. Okay, let me call it the DT. Okay, this is a downtrend. Now, because it is downtrend, the most recent lower high is this very one. Then this very one is the next one. Okay, so this means that if I want to sell, I want to see the candle to break the most recent. If I want to buy, rather, I want to see the candle to break the most recent lower high. So I'm expecting the candle to cross through to this most recent lower high and bounce and go to the top. Okay, so it must break the most recent lower high before I can buy, because I want to buy cheap and also sell from a point that is very expensive. So if I want to sell from a point that is very, very expensive, I want to sell from the most recent higher low. This is the higher low. This is the higher low, most recent. So this means that I'm expecting the trend to do me a favor, to do what? To downtrend. And when you're downtrending, you must break this most recent higher low or this most recent higher low before I can actually sell. Okay, so variably, if you're in an uptrend and you have higher high, higher low, higher high, higher low in a trend, so what do you need to do is to mark what? If you mark all this junction, you need to mark all this junction. This is the point where you are expecting the price need to break before you can sell. Okay, because the price is very expensive, so you're expecting it to sell. All right, so this is higher high, higher low, higher high, higher low, higher high, higher low. So I want the price to do what? To do me a favor. I'll set this trap. These are my trap. These are people that have shown charts. These are how I set my trap. You must break this before I can sell. Okay, so it has to break it. So there is a particular point I'm going to show you. I'm going to show you in the chart now. There's a particular point that you need to, the mapping of this is a map now. The mapping must not be too much or too high because it's going to affect your stop loss and you get stopped out. All right. So there's a particular point that you need to make sure that you do not take too large mapping because it's going to affect you. So when the price crosses through this point, it can do a reversal and boom, trust me, it's going to go down. So this down that it goes down is another concept, but I'm not going there yet. So this is equal highs. Okay, equal highs. People that have read the chart, they're already using equal highs to trade. I feel they understood a bit of it. So this is equal high. I want it to be equal, then I sell. This is another strategy. Okay, if I'm not using this most recent higher low, I can use the equal highs here. This is one equal high. This is another equal high. This is another equal high. I'm expecting one or two to meet before selling again. It's as simple as that. No juju or no cho-cho or anything in there. Do you understand? So if the chart is going downtrend, this is what you do. Okay, you're expecting it to be going downtrend because the chart's previous analysis is uptrend. Remember, it's uptrend. All right, and you are seeing that the price is too expensive. You're going downtrend now because the price is too expensive. Nobody is coming to buy again. Nobody has the money to buy again. All right, so if the chart is not doing the opposite, okay, the chart is not coming down. Okay, creating what? Lower low and lower high. You should be familiar with the short names of this, the characteristics of this now. Lower low, lower high, lower low, lower high, lower low, lower high. There's also swing points, swing points, highest point of reversal, lowest point of reversal, highest point of reversal, lowest point of reversal. All right, so they are swing as well. So because they are swing like that, what do I need to do? What do I need to see? What do I need to look? Remember that as I'm marking out my breaks, or as I'm marking out my the junction, this is extreme. This is an extreme because its price is cheap, so it's an extreme demand zone. Okay, this is another extreme demand zone. Okay, you can call it demand zone. All right, so here as well, you can call it demand zone. All right, so this particular part now is where I'm after. This is what the breakout structure. Remember the previous one we took, this is the breakout structure at this point, but we're not taking it. So, but we are taking the most recent lower high for this point. But this one, we are taking the what? The most recent lower low. Okay, because if you do not get it very clearly, it might be very difficult. All right, so the most recent lower low. All right, so this is downtrend now. Lower high, lower low, lower high, lower low, lower high, lower low. All right, so I want the price to do me a favor, to do what? To trend. Okay, this is an extreme demand zone, so cross through. This is the most recent lower high, lower low, lower high, lower low, lower high, lower low. This is a break. Okay, I'm not taking the breakout structure of the high trend or the uptrend. So for this particular one, I'm using the breakout structure now as where I want the price to do what? To break. The price must break through this before I can confirm that yes, Bash can now buy. So it must break this. If it doesn't break this, it can't confirm the trend. So it must break this particular point. Okay, it must break. It must break the most recent lower high. All right, this is the most recent lower high. The most recent lower high and that recent lower high. It must break it before I can tell that I think I'm not going uptrend again. I'm not going downtrend again. I'm going uptrend. So that's how you can actually use the trend to buy or to sell using the market structure. Okay, so let's go to a typical example. Very good, very good. You can see this particular one. This is a gold price. Please don't trade gold. Don't trade gold. I'm putting a disclaimer. Don't trade gold. All right, so this is a chart now. You can see the way I'm drawing it. I'm drawing it from the lowest point of reversal, the highest point of reversal. The downtrend is over. So after the downtrend is over, what do you notice? Let me draw it out now. I will draw this most recent break. You can see, just be looking at what I'm drawing. This is the most recent break. You can see it's respecting what I drew. That's all. There's nothing to draw again. I have to now. The most recent, you can see, this is lower high, lower low, lower high, lower low, lower high. So this is the most recent. You can see it's respecting this lower low. All right. So it's respecting this lower low. It must break this before I can say, okay, I'm going uptrend. You can see this point. The example I gave, it must break this before I can say I'm going downtrend. You can see this. It must break this because I say I'm going uptrend. So this is the same thing that happened here. You can see the most recent. You have to wait for this candle to form. So immediately it broke it, pushed to the upside. Look at it. I drew it. It broke this point, pushed to the upside. So this particular one must actually meet with your lower time frame. What I drew here must actually meet to your lower time frame. So if you go to lower time frame, this is 4 hour. Let's go to 15 minutes and see the behavior of the chart. I'm sorry the video is long. I'm very, very sorry. But I need to make sure that you understand it very, very well. Very good. You can see. Imagine I put a buy order at this point and my sell is at the, you can see. Where did I begin the candle? The drawing. Okay, there's one at the top as well. Okay, you can see. You can see where I decided drawing it from. Very good. This is it. This candle I drew in 4 hour. You can see the way it respected it. But because I drew the candle in 4 hour, okay, I need to be sure that it is not going to clash in. Because if you drew the candle in 4 hour and you leave it like this, maybe too much for you. So you need to come to lower time frame to adjust, because this is Monday, May 2025. So you can adjust the candle, all right, to the last candle. That's the demand zone now, remember. The last candle now. You can adjust the candle to that point. You can see the last candle. You can see it's respecting it. It's respected it here. Buy to the next break. You can see this is a breakout structure. Okay. This is a breakout structure. Uptrend. This is a breakout structure. Uptrend. You can see it respected that. And what did I tell you about? I need equal highs and I'm going to sell. This is equal high. You can see equal highs and it sold to this point. This is what? This is May 16, 2025. This is just, I'm not even using liquidity or whatever. I'm just using market structure now to explain. Do you understand? So that line I drew from that end point, the last candle that pushed to the upside, you can see that's where I drew this. So since I've already gotten the last candle that pushed to the upside, you can see that the chart is respecting it. It respected it. It respected it here. It respected it here again. You can see it respected it here again. Respected it here again. You can see it's there. Buy when it's enter here. Buy when it's enter here. All right. So that's people that have seen my chart. That's what I do. You can see this one is too large, but as it's too large, let me go to where it started from. I will just shrink it. I will shrink it to the last candle. Where's the last candle? Show me the last candle. To the upside, because we have two crosses of the other block has been broken by mitigation block. So this is the last candle we're going to use because it's shifting to the upside. Last candle. So let's go. Did you respect it? Buy? No, it didn't respect it here. We can get any confirmation entry there. Is there any respect? Yes, there's respect here. It bought here on Tuesday. You see it? So if you miss this particular one to buy, you can see it consolidated on what I actually started from here. So that last candle is very, very important. And see, if you go to the end here, you can see it worked out here. So if you miss on Tuesday, last 2 weeks or last 3 weeks, you can see here, you're getting your entry again at this point. So that's why trading is not all the time. So I can hold this trade till you can see the number. Oh, sorry. I can hold it straight. You can see uptrend, continue. It respected it again. It came in again at this point here. Do you understand? Bounce again to the top. So I'll just put my buy order long position from this point. Okay, put my buy long position from this point. But I'm looking at buying when the candle enters here. Then my stop loss is going to be somewhere here. So this is like 7.65, like 7.65% for every $1 risk. You can imagine. So it's as simple as that. I'm not even using liquidity. I didn't talk about liquidity. I didn't talk about supply and demand. I didn't talk about. I'm just teaching you basically how you can use. Look at what I drew in this particular point. This candle, it's here already. When I was explaining in the 4-hour time frame, when I was explaining, you can see this is it. So if I'm not using the equal highs, you can see equal highs, one equal high, another equal high, another high, 3, and the sell. I can use this particular, the last lower high. It must break it before I can sell. Okay, break it, then I sell. Break it, then I buy. All right, so you must be very careful, and it can break it and also buy. It can break it and also sell. But you have to wait for that break. When it breaks, go to 15 minutes and see if the trend, if the break is still continuing or not. If it continues, that means your trend is confirmed already. All right, so it's very, very easy for you to understand all these things. So look at it, break it, I buy. Okay, break, I buy. All right, so it's very, very easy. Okay, let me know if you have any question. I'll be posting the video now. I think it's like 15 or 20 minutes.